that upside crazy bubble target, using that kind of everything code structure that I've talked about in the past, we get price targets of 500,000 plus. So even if I discount me for being a moron by 50%, you still get 250 grand. So that's kind of the spread to me, 150, 250.
Welcome to Bitcoin Broadcast, your go-to channel for everything Bitcoin. From the latest news and market updates to in-depth analysis, we're here to guide investors through the ever-evolving landscape of Bitcoin. Today, we're diving deep into price predictions, market dynamics, and insightful perspectives from financial expert Raoul Pal on the future of Bitcoin. Let's kick things off by exploring the factors currently shaping Bitcoin's market. Raoul Pal brings to light the impact of GBTC and the intricate market dynamics at play, crucial for anyone looking to understand Bitcoin's potential trajectory.
Basically, it's the overhang from GBTC. So there's a lot of activity, a lot of repositioning. Net flows have been offset really by GBTC as people are unwinding the arbitrage and stuff like that. So I don't think you need to read much into it. It probably has to digest. Don't forget, you've brought forward a lot of demand. Net, what will have we brought forward? $2-3 billion of demand. Okay, so that takes time for the market to digest. And then you've got to think through who the RIAs are, who these people are. And if you put them in your head, these are not New York dealing rooms who are getting on the phone and say, buy this now. They're people who are wearing slacks, who read Barron's on the weekend, read about the ETF, aren't sure, go on the golf course, see their best client. He asks them a question. The whole process is slow. They've got to go and have steak dinners and all of that stuff. So the whole process of bringing people in is going to take a while longer, but it's there now. I just think of the ETF as a trade deal between fiat world and crypto land. And so now capital can flow in much easier than it used to. I kind of think of this as a mental model as like China entering the WTO when everybody could invest in China. That's what this is. Now, these aren't permanent residents in crypto land. This is more hot money flows, tourism flows, hot money flows, direct investment, foreign direct investment, that's VC flows. And then we've got a bunch of residents there, people who have wallets and all of that. So I do think of it as an economy, and this just allows trade.
Building on the insights from our previous discussion about GBTC's influence on Bitcoin's market dynamics, we now shift our focus to a key player in the cryptocurrency space, the millennial cohort. As the largest group of Bitcoin buyers, their investment strategies, particularly in 401ks, are shaping the market in unique ways. Their approach to Bitcoin as a long-term investment is fostering a new kind of stability in the market. Let's delve deeper into how millennials are driving a significant shift in Bitcoin's volatility and market adoption, and explore the potential impacts of their investment habits on the future of cryptocurrency.
So if you think about the biggest buyers of this stuff is actually the millennial cohort. What the millennials do really well is they invest in their 401ks every month. And they can put this in their 401ks. So that's sticky. That's why ARK didn't get all the redemptions when it went down 75%. It's because it's millennials who own it and they put it in their 401k and they're in it for the long ride. So I think it's the boomer crowd who'll be more concerned about the volatility. I think that's a very good thing. There's going to be a lot of people putting it as a long-term asset, buy and hold, and that should give it the stability that you need, that you don't just get massive washouts from people panicking the moment it goes down. And I think most of the ETF providers have made it pretty clear that it's a volatile asset and it's a buy and hold asset. I think as assets mature, they become less volatile. So I think we need to expect that. And particularly from passive flows of 401k investors putting it in every 2 weeks, every month, that'll keep a bid that didn't exist before. So I think, yes, we'll probably see lower volatility, but we'll also be feeding capital into crypto land, and crypto land's not just the state of Bitcoin, it's a whole bunch of other places that are going to see capital flows. So the Wild West will still exist, but the big daddy becomes less volatile, yes, it's a shame because we can't make as much money out of each cycle. But if our underlying philosophy is we want the adoption of this technology to be broad and deep, it has to go that way. So it's kind of good from that philosophical angle of trying to change the world, bad from the ridiculousness of the cycles and how profitable they can be if you get them right. I don't know is the answer for the same reason. Also, everybody's got PTSD because of last time, right? That second run up after the big correction, the second run up, everybody thought it was going to extend further and it didn't. And so everyone's got PTSD. So how I'm thinking about it, I'm giving a 60% probability this is a relatively normal cycle, in which case it would get to 150,000, let's say. I'm giving a 20% chance that it's actually a front-loaded cycle because of the ETF and other stuff, that maybe it gets to that 150 faster and then fades, which will be kind of pain for a lot of people who expect it to go into 2025, right? And then the other 20% chance, I think, is that this ends up being a bubble cycle. And so it looks more like 2011, 12, 13 than it does the previous one. And in which case, if you remember that cycle, it had a interim top correction. Everyone thought it was over, and then it just exploded again. I think there's a decent chance of that, but we need to see the contextualization of how the ETF flows impact, what's happening with monetary policy, what's going on in the economy, how the election's going to play into this. So that's how I'm thinking of it. That upside crazy bubble target, using that kind of everything code structure that, I've talked about in the past, we get price targets of 500,000 plus. So even if I discount me for being a moron by 50%, you still get 250 grand. So that's kind of the spread to me, 150, 250.
Having explored the influence of millennials on Bitcoin's market dynamics and their preference for long-term investment strategies, we now turn to a broader perspective on the cryptocurrency landscape. We'll uncover the significant impact of the financialization wave that swept through the market in 2020, predominantly driven by the millennial crowd. This segment delves into the burgeoning world of Coinbase accounts, the potential resurgence of dormant investors, and the evolving landscape of blockchain applications. We'll also examine how these factors intertwine with broader market structures, including options and ETFs, and their implications for Bitcoin's journey towards mainstream financial integration.
Think about the crowd that got financialized in 2020. Again, mainly the millennial crowd, right? There's 110 million Coinbase accounts. And when I checked 6 months ago, only 9 million were active. So speaking to the guys at Coinbase, they're like, yeah, in normal activity, it'll get to 35, 40 million, and the top will grow as well. So there's a lot of money still to come in of people who participated last time around, have that interest, still have PTSD, will come back in. So maybe that offsets it. I don't know. I also have a feeling the applications layer of blockchain is going to bring in a lot more use case. So I'm thinking of this cycle as maybe the everything everywhere all at one cycle, when people have different unlocks for NFTs or inscriptions, or different unlocks for smart contracts and some of the other things, and they can use it for everything from whether it's ticketing to real world assets. So it just depends how far that applications layer goes. If the applications layer doesn't make much progress this cycle, then you're dead right. We'll see rebalancing. Don't forget, they're also going to be issuing options on the ETF, and that changes the structure of markets as well. What you've done, and it was always going to happen, is Bitcoin's now become financialized when it wasn't really. It was still had purity to it. Now, it doesn't mean it's impure because of this, but you've allowed a financialization layer. And what that's going to mean is that they are going to offer leveraged products on it. Now, options are kind of defined risk products, but what you end up with is, in a very high volatility product, we get a lot of volatility sellers. and it dampens the market because they're always hedging. And that hedging structure can really change the nature of markets. Sometimes it creates acceleration points because everybody's short and suddenly the price goes through and everyone has to buy everything back. Other times, just by the ongoing selling of yield, selling of premium for yield, it slows down the whole market itself. So I do think that's a bigger deal than people expect. But the casino for options on ETFs is going to be quite amusing for a while as well, because if you think about how much the Robin Hood crowd use options on tech stocks, they're going to go wild on this stuff. And they've not been able to. For Americans, it was really hard. Deribit was not accessible to Americans. They're now going to start using options. I don't know when that launches, but it'll happen at some point. And that brings in all the market making firms and the investment banks and all of these other financial players. So this is the difficulty people have with different time horizons. So interest rates are set by the Federal Reserve. The Federal Reserve operates in core inflation land, which is driven by core inflation and unemployment, which is driven by stuff like owner equivalent rents and stuff. All of this stuff is lagged. So the Fed operate in that lags. Stuff like crypto and tech stocks are trading on liquidity and future liquidity. So financial conditions, they eased a long time ago. So people looking at the Fed saying, well, when the Fed raise or when the Fed cut, that's not relevant. What's actually relevant is what the kind of financial conditions are doing, which have been loosening massively, and liquidity has been rising. Whether you use Fed net liquidity or broader measures or M2, they're all rising on a global basis. And the global basis is another key thing most people miss because they kind of look at the US only. But if we look at this cycle, who's got the biggest economic problems right now is China. So they probably have the biggest bazooka to fire to try and get their economy going. Then it's probably the Europeans, then the US. It feels that way. But we've seen liquidity. I managed to catch the bottom in crypto and tech last year because of liquidity had bottomed. And the moment it bottomed, ETH bottomed first, and then the whole space bottomed, including tech, in October. And it's just been following that liquidity cycle ever since. And using my forward-looking projections based around this everything code thesis, it should continue all the way into 2025. And crypto should continue to price that.
Raoul highlighted the significant role of blockchain technology in diversifying Bitcoin's applications, from NFTs to smart contracts, and how this could shape the future of the crypto market. We delve into the fascinating concept of the everything code. This thesis, born from 3 decades of meticulous study, offers a profound insight into the cyclical nature of global economics and its interplay with Bitcoin's evolution. We will explore how central banks' policies, especially in response to global crises, inadvertently shape the trajectory of Bitcoin and other cryptocurrencies. The discussion uncovers the underlying patterns that influence asset prices and the broader financial landscape, revealing why Bitcoin thrives in the current economic environment.
The Everything Code is a thesis that I put together after 30 years of work where it came randomly. We kind of all know the world's broken. There's all the debt and the demographics and stuff you and I have talked about many times. I started looking at the ISM, the business cycle, so the Institute of Supply Managers survey, and it was like fucking clockwork every 4 years. And that kind of stopped me in my tracks, like this didn't exist beforehand. And then I realized that what had happened in 2008 was a debt jubilee, where every central bank said, we'll cut rates to 0, so you don't need to pay the interest. Think of it in those terms, because there was too much debt. So every government around the world reset their debt to 3 to 5 year sector. And that leads to this 4-year cycle, which is the same as the presidential cycle. And it's the same as the halving cycle, because Bitcoin was born out of that, right? So everything is now perfectly cyclical. And that won't change until we solve the debt problem. And once you understand that, you can then forward look where liquidity is going to go. Because if we're repeating the same cycle, you just use the old cycle, map it forwards for ISM, and it gives you a forward look on assets. And if that's the case, then it's a real code. Now, what I found within this was that the use of the balance sheet by all of the central banks was just for one thing: to pay the interest on the debt of the previous cycle. So they are just debasing the currency in the purest, simplest form, which is why we all make so much money out of crypto, because it does the best, because it's got technological adoption and it's a scarce asset. So it does phenomenally well when they debase. So liquidity comes in, that's great. Debasing the currency is super great. And so we've now got, coming forwards, if we look forwards, we've now got all the COVID interest payments to make. You cannot do them at 5.5%. We saw that before. The bond market freaked out. There's no way you can finance it without all the debt payments going exponential. So the Fed have to bring rates down, and it's going to end up on the central bank balance sheet, as it always does, because there's no other way. Because if you think about how the world works, is GDP growth, trend GDP growth in the US is 1.75%. The government's 100% of GDP in debt. It's actually more, but for easy maths. If interest rates are 5%, that's 5% of GDP that needs to pay the interest. But growth is only growing at 1.75, so you'd have negative growth. Oh, but the private sector is another 100 and something percent of GDP in debt. So they're competing for the same GDP to pay the interest. So something has to give, and what gives is the government side ends up on the balance sheet. So this was all this big thesis I found from the Everything Code that made everything explainable. Why asset prices rise? Why is it becoming predictable? Why have we got these cycles? And what's really going on, which is the debasement. And debasement, to think about, they're doing it about 15% a year on average. So they could have either raised taxes by 15% to get the payments, which is politically unacceptable in an age like now. So instead, they just flip the coins and debase the currency. And people don't really notice. They just notice that the rich get richer because they can afford scarce assets, and the poor get left behind, which is creating this huge political divide as well.
As we've explored the intricate dynamics of the global economy and its impact on cryptocurrency, it's clear that understanding the broader financial context is key. This knowledge not only informs our investment decisions, but also shapes our perspective on wealth and asset management. Now let's shift our focus to a crucial aspect that affects all of us: inflation. We'll dive into the nuances of different types of inflation and their implications on our daily lives and future financial planning. Additionally, we'll look at practical strategies in cryptocurrency investment, emphasizing the importance of informed decision-making in this rapidly evolving market.
So I think there's two inflations, and each person has a different inflation. Your inflation rate is different than mine. But I think there's two inflations. One is the inflation versus your income, which is what we saw last year. So the cost of goods rises faster than your income, so you have less discretionary spending power, right? That's what caused the economic slowdown. That was the shit show that happened in 2021, 2022. Asset inflation is different. Your future self is poorer. What an asset is a way of tying up your capital in something with an expected return. So in a future date, you're hoping to be wealthier. The issue is there. So with this regular inflation, which I don't think is sticky, I think it falls back again. It doesn't mean that prices don't come down. The prices come down, but the rate of inflation comes down. This asset inflation is more pernicious, and it's the thing that people don't understand. You know, if you go and speak to your parents and say, you know, how many times your income would it cost to buy a house when they were in their mid-30s, they would say 3 times, 4 times. You ask a 35-year-old now, how many times your income would buy a house? It's like 10, 12, 14, 15 times, right? So their future selves are poorer because they can't buy that house. I think that is more destructive over the long run. Look, you've been around this for a long time. We've all made the mistakes and everybody makes mistakes. It's very hard dealing with an asset, let's say crypto, that is very volatile, but when it runs, it really runs. And you become overwhelmed by emotion. FOMO, you see your friends bought that 100x dog coin and you're like, I want some of that. You want to look for 100x's as opposed to just own some Bitcoin. And if you want to own some ETH and if, a few of the big projects and just buy and hold, but people don't do it. They want to start trading it because they think they can make more money. Also, they custody things wrong. People start thinking, I want the extra 5% yield by sticking into some project of which they know nothing about the security of. And the don't fuck this up is don't let somebody take your tokens. Don't trade and hold quality assets. If you can do that with 90% of your portfolio, you will do well. Keep 10% to be a total filthy degen. Do what the hell you want, because that will go to zero. We've all got the wallet of shame, right? Every single one of us has a wallet of shame of shrapnel left from the previous cycle that didn't do anything. So don't fuck it up is trying to protect people from themselves. And so we've actually even issued an NFT, which is free. So it's in your wallet and it's a video of me saying, don't fuck this up. So when people go in their wallets, there's me looking at them disapprovingly, trying to say, look, don't fuck this up. So if people want to do that, you also get the subscription to the free subscription to the Real Vision platform, but it's free. So go to realvision.com/pomp, get the do not fuck this up, don't fuck this up NFT. It's free, but it's the most valuable NFT you'll have because it'll stop you doing the stupid shit that you know you'll do when you lose your mind.
I love it.
So I'm just trying to help people is really, in the essence, I'm trying to help people because I think we've maybe got 2 more cycles left at best. And this is a game changer. And as we talked about, most young people can't afford, they're now starting to have kids. They've got kids schooling, university. They can't afford a house. If they do, they have to move miles outside, further away. They can afford less of the S&P than their parents could. All of that stuff. So here is the chance to increase your probability of your future self living up to that image you've got, which is people want a comfortable retirement. They want their kids to go through school. They want a house to live in. They want to be able to pay their medical bills. Well, if you just don't fuck this up, you can do that. It's not a guarantee, but there's a high chance.
Thank you for tuning in to Bitcoin Broadcast, where we strive to bring you comprehensive insights into the world of Bitcoin and cryptocurrencies. Today's discussion has taken us through a journey of financial trends and crypto strategies, underlining the significance of staying informed and vigilant in our investment choices. If you found this video helpful, please show your support by liking and subscribing to our channel. Don't forget to hit the bell icon to stay updated with our latest content. Your engagement fuels our commitment to delivering quality analysis and news. Remember, in the world of cryptocurrency, knowledge is not just power, it's profit.